Hello, Dilly. Hello.
Hello, George. How are you?
Good.
Are
You
you
know what the
having a
hard?
beautiful day?
Yeah, the hardest thing about these spaces, honestly, if I don't figure out the song well in advance, I start panicking. And I got to put out another call for songs because that's the hardest part of doing these spaces, honestly.
You know you can always call me for songs.
Well, okay, so we gotta do that. But it is a beautiful day here. The sun
Mhm.
is coming out, and it started out as one of those days. You ever get in a situation where you wake up like you didn't get much sleep and you just feel like crap, but if you get enough caffeine and you let a few hours go by, you start to feel better. Like I felt so tired this morning. I gotta have to cancel this space, but just give it a few hours. You rallied, so
Mhm. I kind of felt
whatever.
like that today too.
Yeah, it's just one of those days.
Yeah.
Any rate, we're going to dispense with a big monologue. I think it's probably better we talk after Rudy leaves, and we can talk behind his back.
Okay.
So, any event, nobody knows who Rudy is.
Oh,
Um,
really?
well, I don't know. Maybe Marc Cohodes knows who he is. I don't know who he is. Okay, but he's a great follow, a great listen. Um, really, maybe one day there'll be a big reveal. I mean, I don't know. Maybe I don't know. Hey, Rudy, you there? Welcome. Good to see you.
Yeah, hey, thanks for inviting me on. How are you?
Yeah. Hey,
Welcome.
Rudy, why are you in the federal witness protection program? Like, do you have a job at some finance company or something, or you
No,
get
no,
conflict of
no,
interest?
no, no.
What
It's
is
just
it?
this. This was because I don't want to subject my family or anything to any ramifications for me popping off on on the internet. I mean, I for a,
Sure.
s- for a long time, this is just my thing, and of course
Right.
they're all aware of it now, a family, but
Sure.
I got nothing really to sell. I mean, I other than my my Substack, but no, I'm not
Yep.
from the finance business. I
Okay.
just
All right. So it's
Do
just you
you
don't
have
want.
some spicy posts or something?
huh?
No.
No, no, no.
No.
I'm not looking for I mean, I could try and make money or something. I mean, I could sell t-shirts and go on, go to shows, and I've been invited to talk and stuff, but I just like what I do. I like my little niche, and I like the Substack's great for longer form stuff, and Twitter is ideal for my, my artistic ambitions, as Jim Shaughnessy says, I'm a, which I loved. He says I'm a writer and a satirist, and it's like, wow, that really meant a lot to me when he said that,
Yeah.
because that's kind of
That's
what I've
great.
morphed into here.
Right.
So,
So before we get into it, just for those of you that need brushing up on their history, Rudolf Havenstein was the president of the Reichsbank during the hyperinflation of I think it was 21. Let me look it up here, 21 to 23. And so when everyone, you've probably seen in the movies, everyone knows about the Germans hyperinflated themselves and the wheelbarrows of money, all that kind of stuff. Rudy was presiding over that. So our Rudy is inspired by that Rudy. And Rudy, I'm not saying history is repeating itself, but I really dig your profile. I think it's very, very creative. So that's awesome.
well, thanks. Well, as I mentioned to you, I meant it initially. God, what is it? 2013. So 12 years ago, as a warning, not as encouragement. But it appears that it's last dozen years has been more of encouragement, towards that. And I was not. I'm never. And I made it clear years ago. I'm not calling for high. I mean, I don't. I mean, U.S. certainly won't be the first to fall. And I don't. I mean, in my mind, hyperinflation is the worst possible end game for 96% or whatever of the population. I mean, the guys like Larry Fink would make out okay, but
Sure.
most of the population's devastated. And as I've posted on many times over the years, I think there's an absolute direct link between the German hyperinflation and the destruction of the morality of the country that did,
100%.
and
100%.
Hitler and Hitler.
Yeah, 100%. All right, but let's not get into politics right now. So we can talk
Well,
about the consequence. No,
yeah,
no, hold on,
sure.
hold on. We always talk about the consequence of politics, but we try to keep this a political. I mean,
Oh, I no
it's fine.
problem. I
It's
want.
just, it's fine to say, you know what, I think Trump is doing this or
I didn't mention
whatever.
Trump. I mentioned in Germany what led to Hitler. So that
No,
was
I know,
just
but I'm trying to preempt. We maintain order in the courtroom here, and the way I do that is I preempt. It's not what you said. I'm going to
okay.
preempt the crazies from starting going nuts on it,
Oh, the
unless anyone
crazies.
just
Well,
yeah. Okay.
that's
Anyway.
most of my followers. So thank you. Good to see you guys here. Hey, what happened?
Oh God.
You scared Coyotes off. I wanted to say shout out to him. So,
No, he's there. He's
oh, is
there.
he
You
here?
got. No, he's right next to you. He's right next to you. Okay.
He was.
So
Did he? Now I see
no,
Andy. Hi, Andy. Yeah, no, I
No,
think
he's
Mark.
and Andy's there, Cody's there. Don't worry, your fan club's turning head. All
Okay,
the crazies are showing up. All right.
all the
So,
crazy.
all right. So, all right, Rudy, hold on.
Yeah.
I wanna let's put some order to this conversation. So, I meant the title of this. I'm gonna just pose a long-winded question to you, and then I'm gonna let you have at it. I wrote, the markets are broken. How will it stop? So I look at this whole thing, and I've used this analogy many times. It's like a drunk driving, down the side of a mountainside, down a road, a snow covered road. And, let's say I'm driving, you're in the seat next to me. We get too close to the guardrail, i.e., inflation's going up too much. You're like, George, spin the wheel on the left. So we go careening over the other side of the road. Uh-oh, we're gonna have a recession. Spin the wheel to the right. We keep going back and forth, back and forth. I guess, another way of saying, I mean, there's constraints here, they're limited to what they can do. Then you throw on top of all this nonsense with the tariffs and it's 3D chess or throwing shit against the wall, nobody knows, whatever. So, I'm just kind of, and listen, this can go on for quite a long time. I mean, a lot of the concerns that are been raised now were true, certainly pre GFC and, whatever. And here we are 20 years later. It's the same, the debt, the deficit, this, that, everything else, trade deficit. So, where does this all go? I mean, I think, it can take a long time. So, where does this all go in your view?
Well, I'm not short. I mean, I'm net long. I'm very long, as I like to say. I'm bearish in theory, but not in practice. Yeah, I listened to Mike Taylor yesterday. Great guy. And he's basically says what's going on now. The government spending is what, 7% deficit of GDP.
Yep.
That's
Yep.
going into corporate profits. That's being spent, all over, and a lot of it's going to, all over to companies. And so the earnings should stay okay as long as that continues. And then, as far as where it goes in the stock market, Mike Green explains that with the flows. So it'll go to the big will get bigger. So, the stock market goes up. I mean, I'm, my, like I said before, I'm not, you said yesterday, you have no use for market prognosticators, and neither do I, market goes up, what, 90% of the time? I think it'll go up 90% of the time. So, my short is cash. I'll have too much cash, but beyond that, I expect markets to overall continue to go up. Now, they've dropped 50% twice in the last 25 years, so that could happen. I'm well aware of it, and I lived through it. So, but overall, I expect markets to go up
Okay.
nominally.
So, all right. So let's tease that out a little bit.
Okay.
So it's a market of stocks, as they say, sectors, industries, or whatever. So given the macro environment that we're in, it's fine to say number go up. Okay. But like the way you look at the world, given inflation, growth, all this other stuff, are there the type of environment, what does it lead to? Certain types of industries or companies, or some people say, for instance, quality's kicked the daylights out of crap the last few years, large cap over small, platform companies, companies with good balance sheets, blah 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 blah. Okay, you think that all kind of thing continues, or do you think it's an energy trade? I mean, where do you care to get
Well,
more granular, just to below the market level?
I'm not your typical investor. I've been doing this by myself since I was 18, just learning, and I don't follow anybody. I don't have any particular paradigm or, I see inflation. I think the end game is more and more inflation. So I like stocks that are protected from inflation. And I've mentioned before, I like the way the Horizon Kinetics guys like Steve Bregman or Murray Stahl look at it, where they're
Hmm.
looking at companies that benefit. And I do have an investment with them, with their INFL fund,
Right.
because they're looking for, instead of buying a miner, they might buy a royalty company, because they don't have to worry about high labor costs as much or high energy prices
Sure.
or anything. So that's the kind of thing. So yeah, I'm absolutely focused on things that'll benefit. Gold. I've been a fan of gold forever, but to me, gold is a handgun you keep in a drawer and hope you never need. And maybe
Hmm.
you want to have two or three guns. But um, gold is money, and in my mind, and so that's part of the investment. And I've never been really big on silver. I do have some. I know a lot of people are real high on it. I got no opinion. I mean, platinum, has been popular lately, or getting more popular. So those kind of things. Also, companies that have actual earnings and have positioned themselves for inflation. I mean, I remember when Berkshire bought Burlington Northern, and I remember reading at the time an analysis that said this is a play on future inflation. Buffett's very aware of inflation. He wrote a paper like back in 79 or something on how inflation steals from the equity investor. So I imagine Berkshire and I'm sure some other savvy companies are well aware of how higher prices, work, and actually, the 70s was a terrible time to be in the stock market, overall, especially in real returns. So, yeah, companies that benefit from inflation, but I never own the popular stocks, and it's cost me over the years, but I also never own anything that really blows up either. I don't own Nvidia, I don't own any of the cool stocks, and I've still managed to do pretty good over the years. So, I'm just kind of an odd bird when it comes to
Got it.
investing.
So things that are protected that benefit from inflation. Okay.
But they
Um,
have to have a real business too, I
right.
mean, yeah.
Right. All right. So let's go a little further with that. Do you look beyond the? I mean, let's talk about the dollar, bonds, all that kind of good stuff. All these macro variables. Just share with us your thinking about. So I read I watched your interview with Maggie Lake, is one of my favorites.
Oh, yeah.
Just color in a little bit for everyone who didn't have a chance to watch that or listen to that. What are you thinking about? The world. I mean, is there anything to do with the dollar and bonds? Any of that good stuff? Like, what's your sort of backdrop?
Well, I know it's popular now, and frankly, I've looked at this before. There's so much investment's gone to the United States over the last few decades, relative to the rest of the world, that we really are. Remember back in, what would it be, the 80s, Japan? Everybody, you would have had to put 25% or more of your money in Japan, because they were the biggest companies, and so the thinking is now the U.S. is the same way. But then again, I'm like, where are you going to go? I mean, I consider Europe to just be a mess, a disaster. I mean, I know they're going to spend whatever $1 trillion, but I think 500 billion of that or something is earmarked for ESG type things. I don't know if Europe has the energy to compete with us on, like, AI or anything like that, or even industrial. I mean, Germany closed all their nuclear plants. I know Germany's supposed to be this powerhouse, but I mean, these kind of things make me leery. And of course, China, I've never invested in. I mean, I don't care if Baba's shares are $5. Now, I understand you can buy them and someone else will buy them from you at 100 and you'd make 20 times your money. But I just don't do that, because when you buy a share of Baba or any Chinese company, you don't really own anything. You own a certificate from to some entity in the Cayman Islands or something. There's no
Right.
rule of law there. And just like, look what happened to people that own Russian stocks when they invaded. That same thing could happen, like if China invades Taiwan. You lose everything. You lose all your plants and equipment that's over there, your intellectual property. Plus, you lose, your stock goes to $1. So I have
Right.
no
So
interest really. Where are you going to go now? Maybe South America. I mean, that's been for the promise my entire life. I mean, yeah. I mean, I'm still a fan of America overall. I mean, I like American companies. I think Mexico. I saw. I didn't read the article. I saw a headline today about Mexico being the next China, and I think that kind of makes sense. These are hardworking people. They got good supply chains down there, and a lot of experience. And so, make a lot of stuff here, make the high tech stuff here. But if you need to make the lower tech stuff in Mexico more instead of China, that's fine with me. Is it going to cost a little more? I don't know, probably. But
right.
as for the dollar, I just posted yesterday like a 40-year chart of the dollar, the DXY. Now I know there's other indexes, but the DXY. And I mean, it's basically in the middle of a range that's been going on for 40 years. So I'm hearing all sorts of podcasts with people like, oh, the dollar's going to absolutely collapse. And I don't know if that means it goes to 80 or 70 or what, but I just can't get all that worked up about it. I mean, I don't want that to happen because that's hugely inflationary. And inflation in my mind is the most regressive tax of all. But and we'll see what tariffs are going to do to inflation. But um, so yeah, on the dollar, I still accept dollars. I tell people, and then I had someone coming at me, well, sure, compared to the other currencies, but what about compared to gold or Bitcoin? I go, yeah, no, I'm not. I'm just talking about against other currencies. Like, you're going to move your money. You're mad at Trump. You got $1 million in the bank. Oh, I'm mad at Trump. I'm going to move it to where? England, where if you say the wrong thing, you get arrested. You're going to move it to where are you going to move it? So you got maybe Switzerland, I guess. I don't know if they've confiscated, but I wouldn't trust, the EU not to confiscate because they find out you posted something on Twitter.
Right. Right.
So the dollar, all that macro stuff, which I love. I don't think it's really useful for investing, at least not for an individual investor like me.
What about and so let's okay, so let's go a little further.
Yeah,
So bonds, because I'll
sure.
view on the bond market, and then I'll tie this back to
Yeah.
like what could possibly go wrong in equities. What do you think about the bond market these days?
I wouldn't own. I don't own bonds. I wouldn't own bonds. I think bonds are losers, especially in a realistic inflation rate. So I have absolutely no interest in bonds. The only bonds I own are some I bonds I bought like 30 years ago that are now paying about 5%, or 5%. They were paying as high as like 13%, a couple of years ago, but they've come down. So, but they're still higher than well, they're probably down now to about what you get the 2-year or the 5-year or something. But they're tax deferred and they're state tax free, so that's nice. So those will start expiring soon or stop paying
So, so,
interest.
so, 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 okay. So you wouldn't own bonds, but all
No,
right. So let's go back to equity.
yeah,
So I'm one of those guys that is worried about the dollar, that is worried about the bond market. Okay. So you made your point clear on the currency. I get it. But do you think how much of a risk do you assign to like bond yields going up sufficiently that it could, give the realist? Not things can always happen, right? But
sure.
are you at all concerned about bond yields going up as a likely possibility that could knock the equity market back a good ways, or is that not
Well,
something you
I
lose
guess
sleep
if
over?
it's competition, sure. I mean, you know what though? We're only at we're barely at normal levels. I mean, I look at the Fred data that goes back to the '60s, and I mean, the average Fed funds rate is like around 5%. And we're at 4.4 or 4.3. Um, we've finally normalized. We talked about it for the last 15 years. The word normal. I joked about it many times, and now we normalized. I mean, even mortgage rates. I think over 7% is the average and the median. The last 60 years, we just lived through a 15-year aberration ever since
Totally,
08, 09.
totally agree with that.
Yeah,
And I would actually, the argument you just made is why I think yields are going to go a lot higher because we're not being remotely restrictive on anything. And
right.
so I actually think, forget about Weimar, forget about,
Sure.
the work you did back 100 years ago. I just think when people say, like, I'm one of those gold guys too. So
Yeah.
someone said the other day, like, what would cause you not to be so bullish on gold? And someone, they gave the right answers. Well, if we had some fiscal sanity, well, if we had rates at a level that were maybe restrictive, we're nowhere close. I think inflation's not dead. I think yields are going to
No.
continue to go up. I don't know. So that's why, so I'm not talking Weimar type stuff that you're used to, Rudy. I'm just saying, hey, you know what? What if the 10-year, okay, is it let's just put on 5.5% to start the conversation, okay? Like, maybe the equity market would care at some point. That's the kind of thing I'm talking about. So, and then the point you touched on earlier, where I noticed you slipped that one in there. Real versus nominal. I mean, yeah, the market's up, but yeah, sure. If we denominate in Turkish lira, it's really up. Okay, so compared to gold and some other things, no, it's money illusion. So I don't know. Does any of that antagonize you or trigger you
No,
in any part that you
I
want
mean,
onto?
I completely agree with you. If rates go, I don't know, 5.5% would do it, but if they went, 6, 7, 8%, which would, for half my life that was a normal rate, or that was a lower
Hundred
rate.
percent, Rudy. I'm with you completely.
Yeah. So would that
Yeah.
knock stocks down? Absolutely, because they'd have more competition. They're grossly overpriced now anyway. Priced for perfection, it seems. So yeah, I mean, I'm like I said, I have a high tolerance for pain, and I don't I can live through stocks crashing again. I've done it before. I don't
Okay.
panic. It doesn't bother me. I tend to try and pick up stuff, catch some falling knives, and usually I'm always early. So then, but yeah, I got patience. I don't mind. I can suffer pain. I don't mind having a losing position for a while if I think I'm right, and I don't have to manage other people's money. I've said before, there's no way I could manage other people's money because I have too many people calling me, after a 6 month
Hmm.
period, go, "What the hell are you doing? You're
Right.
insane." So I like just
So
managing my own money, and then I take all
yeah.
the credit and I get all the blame.
Yeah. So with that proviso, I'm not gonna get ask you to get granular because you know how it is. Some knucklehead, you can change your mind 3 times before Friday, and someone's gonna call up 6 months later and say, "Rudy, you said on that space with George to buy this or sell that," and they're
Oh,
gonna blame you for it.
I've tried
You know
never
how
to
that
do that.
works.
Yeah,
You,
no,
you know how that works. You know how
no.
that works. All right. All right. Let's keep this moving. We're gonna bring Mark. Are you still there, my friend, Mr.
There he is.
Cohodes?
Hell yeah, I'm here. I
Mark.
mean,
Hey, Mark.
if you get Rudy on, I'll drop everything I'm doing just to listen to him.
All right. And by the way,
Good
for
man.
those of you who haven't seen it, Mark, I have to salute you. I thanked you already, but you told me you were going to knock their socks off the other day. Oh my God. And I got to tell you something. Of all the speakers, like you and Melody, because she was going on about housing and what a disaster was going to be, like you totally burned the house down with your presentation the other day. So, Mark, I thank you again.
It was great.
It was
Anything,
really, really phenomenal, Mark. So anyway,
anything for you, George.
appreciate it, Mark. So Mark, have at it. You two know each other. Rudy, you know Mark. I presume you guys know each other.
Mark's
Yeah,
a
I
great
know.
guy.
I know Rudy.
Yeah.
I mean, I I enjoy people's minds. I mean, Rudy has a great mind. I don't care if he used to make toothpaste. He's what we're really missing is people have lost their way and they don't think anymore. They've lost they've lost the ability to think creatively and think clearly. And you know, the one thing about this market, I don't really care about the market. I don't really care about bonds because we've been in a what you see, what you get period. You know, throw COVID out,
Yep.
what you see is what you get. And
Yep.
you know, the government wants stocks up. The government needs the market up. People pay capital gains tax. So, you know, the market going up, you know, the tail has been wagging the dog for some time. So if things are too high, great. If they're too low, great. But you know, Porter, my man, and we're focused on the glass house, which I think is going to be kind of a once every 15-year story. And it's amazing how people, I mean, the cannabis ETF out of 50 ETFs, there's 50 of them. The cannabis ETF is the worst performing ETF. And, you know, when Porter and I talk, I can remember a time when the Cigar Lake had a hole in it and they took uranium stocks through the ground and it was the most unpopular trade ever. But if you bought uranium back then, you've made a fortune. So, you know, the setup in certain things, again, if you think or try to think or analyze, setup on certain things are great these days. But
Yep. And
but just whatever you do, just don't short any stocks because it could be deadly. Just deadly.
yeah, Mark, and when I do the conference summary at the end of the day, I talk for 10, 15 minutes to sum up everybody. And I was just so struck by your comments. And I said, that Mark is saying this. I mean, I'm not using it as a contra at all. I said to the contrary, Mark's a really smart guy. And I don't know if you want to mention names, Mark, but when you were recounting what's happened to so many guys in the short selling space, I was like, my jaw dropped. I was like, I mean, this as you said, this is not a good business. I mean, this is hard. This is really hard. And I don't know, are there really any sizable short sellers left? I mean, my
Well,
God.
I mean, the guy, I mean, my friend Neil McConnell and I paid tribute to him a couple months ago. He killed himself. I mean, he committed suicide. That's a fact. And he was one of my guys. I mean, we worked on a lot of names together for 20 plus years.
Hey, Mark, I think he's zoned on us. Still, you can hear him?
No, I think he got a phone call maybe.
Oh, okay, fine. We'll wait for Mark to come back. Yeah, that was, I mean, Dilly,
Mark,
my
are you
mind.
there?
No, I think he's still on the phone. So Dilly, I don't know about you. I was blown away by what Mark had to say.
Yeah, it was really interesting, like hearing that he's done and kind of how bad it's gotten, I guess.
And you take on the other side of that, some of the clowns who are buying, they don't know what they're buying. They're just buying number go up. And Rudy, I guess I'll turn it back to you. I mean, I always like to say, Rudy, sometimes the market makes you look dumber than you really are, and sometimes it makes you look smarter than you really are. And that can kind of tell you where you are, or not you, but it will make smart people look stupid and stupid people look smart. All right. I think back to, and I think you're old enough to remember when, Rudy, I'm guessing, in 2000, when, Chuck Cloud got fired as the chief investment strategist at Merrill Lynch. George Vanderheiden, the second in command at Fidelity, got fired because he wouldn't buy tech stocks. Stan Druckenmiller blew up because he got long tech stocks too late in the game. Julian Robertson got squeezed out and he basically closed down. So that was very informative. It told you where you were in the cycle. And I just look at where we are right now, Rudy. I mean, garbage flying. I mean, it's just, I mean, it's eye opening. I mean, Rudy, you got any
Yeah.
thoughts on
Well,
that?
yeah, I remember particularly Robert Sanborn in 1998 was at Oakmark. He lost his job, and I posted a chart before. He lost his job right at the very bottom of his Oakmark Value Fund. So a lot of smart guys lost their job, and I probably would have lost my job too, because in 98, 99, when everyone's buying pets.com, I was paying down my mortgage and buying REITs, and they kept going down, and then I said they're still cheap, so I kept buying them. And so I knew a lot of people that had never knew what a stock was 3 months earlier, that were doubling and tripling and quadrupling their money. And I know people who gave it all back, over the next
Yeah,
few years. And same thing in 08, 09.
yeah,
So
similar story I'll invoke because I know you speak of Jim Grant. I
oh,
remember going to a Grants conference. This would have to be can't remember exactly when it was. Maybe it was 2007, 2008. I can't remember exactly when. But Jeremy Grantham spoke, and this was just so instructive. This is a hilarious story. You can't make this stuff up. So, GMO's imploded since then, but I digress. We'll get to that later. So, in any event, Grantham Mayo, I forget the exact numbers, but order of magnitude, you get the point. GMO's assets went from like, I don't know, like I'm gonna say 75 million down to like 75 billion down to maybe 40 billion or 35 billion. They got cut in half basically because they wouldn't buy tech. And I remember this is Jeremy telling the story, and I remember when this happened. It got so bad that GM used to be in over 59th Street. We used to be the GM building where the Apple store is now. And Jeremy Grantham, there was an edict issued by the head of the GM investment office there forbidding Jeremy Grantham to be allowed into the office on the grounds that he was a dangerously persuasive person. This was 1999 or thereabouts. Okay. All right. So fast forward. I mean, again, their assets got cut in half. They went from like, 75, 80 billion down to like 35 or 40. So he wasn't allowed in the building. Okay. Suffice to say, we know what then happened. And the next thing you know, their assets went straight from 35 billion up to 140 billion. I'm not sure that was the peak, but you get the idea. But here's the epilogue here, and I only discovered this actually yesterday. I got you, Mark. We'll get you in 1 second. I only discovered this just yesterday, and this shows you how the mighty have fallen. Grantham Mayo, I couldn't believe this. They're down to like I want to say it's like 25 billion or some number like that because they're in the business of making these long-term forecasts, mean reversion. You assume profit margins go back to long-term average, valuations go back to long-term average, and we know valuation is no good as a short-term indicator. But over the longer term, it is a good indication. And their assets have gone down by 75, 80% because their models don't work anymore. So when I say in the title, the markets are broken, I mean, they don't come any smarter than Jeremy Grant or more erudite. But Jesus Christ, I mean, they've fallen on hard times. Mark, you're back. You wanted to weigh in.
Yeah, I mean, I remember when they ran Julian Robertson out of the business in a
Yeah,
weasel suit. They
exactly.
ran him. They ran him out of town in a weasel suit. I
Yep.
mean, completely.
And Mark, the story I love to tell, I know you were there, but the story I love to tell is you had Julian Robertson and Stan Druckenmiller both getting blown up, and one was long and one was short. Like that's hard to do. Okay. In the case of Stan, as we all know, and he laughs about it now when he tells the story. He can't resist. He just could not stand not being at the party. And so, fourth quarter of '99, he was having a tough year. I remember this. I knew a guy who was working for him. He didn't know in tech, and finally he took a bite out of the apple, like in September, October, and he went for it. And in classic Druckenmiller style, he piled in. All right, and he saved his year, kick saving a beauty. I think he was up like I don't know 18 or something like that in 2000, and he stayed with it. And it's like Mark, this. It's like when you can't get enough of something, like you can't have one potato chip, right? So he couldn't have enough tech stocks. And it's funny when he talks about it now. He goes, "I knew it was the wrong thing to do, but I just couldn't resist." All right. And what happens? He goes right off the rails, okay, and blows up. All right. They close the thing in like May. And Julian, to your point, was exactly the same time. Like that, that's the definition of total insanity. You got one guy long and one guy short, okay, and they both blew up. Like that is hard to do. So,
Well, Julian was short Japan, and he was long the wrong stuff, and
yep,
they took Japan through the roof.
yep.
And I'll never forget it. We Goldman Sachs calls us up and pitches us up on the King or Japan, backed by the Kingdom of Denmark put
Oh
warrants.
yeah, yep.
And I said, who in the world would sell these?
Right.
And they'd say, well, the Kingdom of Denmark wants the other side because Japan was going straight up. And we bought just like a crap load of them. I mean, we bought them at like, I think they came at 6, and I think we sold them at 15. Then I think they went to 30.
Yeah.
Because then after they squeezed Julian out, Japan fell apart, and it fell apart for good. But, people now just haven't seen cycles. And the problem is this time is different. Everyone says, it's not different this time. No, this time is different. And being part of many cycles in the past, on one hand, you have to forget what happened in the past. On one hand, you got to remember it. But this thing is up until proven otherwise.
Yeah. So
And
this is.
and
Sorry.
and
Go ahead, Mark.
and that's why, who doesn't know how bad Tesla's business has been? Who doesn't know how mentally off the train Elon has been? But that doesn't stop this thing from trading at 300 and pick a number. And that's after however many splits on this deal.
Yeah.
So,
So
so
this. Yeah. So both Mark, for you, and also Mark, you first, and then Rudy. Mark, I'm just thinking as you're speaking. One of the, it it rhymes. It's always different. It's never the same. But one of the things about this cycle, you haven't seen the supply that we've seen in past cycles. And so you just look at supply and demand. I mean, you look at, they keep buying back $1 trillion of stock every year, whatever the number is. And like, and you got the passive stuff still going. So, but the supply, like Mark, you probably made more than your fair share of money shorting pieces of crap, when they come public, right? You just don't see as much of that stuff anymore. So the supply's not there. That's one factor in favor of the bulls. I mean, I just am amazed.
the one thing I just don't know how it's going to happen is how this private equity positions these horrible names at these institutions. I don't know how that gets sorted out. All this Blackstone, Apollo, all this bullshit that all these Harvards and Yale and all these guys own. I don't know how they liquefy themselves out of that stuff.
Yeah,
That's yet to be seen if rates still go higher from here.
yeah.
Because all private equity really is over leveraged Russell, and Russell hasn't done shit in what, 4 years?
Yeah,
Smaller names. So that's just something slightly to keep an eye on, but I'm sure not playing it.
yeah. Rudy, you got any perspective on that?
Well, I've been reading and writing a lot about the private equity stuff. I mean, my fear is just that they'll do what they did in 2020, where I think a huge part of that bailout was bailing out, failing hedge funds that were so big that, you know, they viewed it as a systemic threat. And I view they'll and I'm sure they'll do the same with private equity, because look who's involved. You think Steve Schwarzman's going to call Trump up or put pressure on the Fed? I mean, these guys are all, you got, as I pointed out before, you got Bernanke at Citadel, PIMCO, you got Yellen now at PIMCO, you had Stan Fisher at BlackRock. Those guys were all calling back in 2020 to Powell, hey, Jay, in fact, Bernanke and Yellen went to testify before Congress in 2020 that the Fed should buy corporate bonds, and at the time I said, well, they said former Fed chair, and I said, well, hang on, don't you mean current Citadel and PIMCO employee, intern Ben Bernanke? And actually, Yellen was working for Magellan Financial back then, which nobody really heard about. So I think that this goes back to the problem with the Fed. I think it's all incestuous, and I fear with private equity, they deserve to fail. I mean, if Bill Ackman goes
Of
under,
course.
the world will still continue to go on. They're over leveraged. They should be punished when things go south.
God, you're sounding like me, Rudy.
Yeah,
Yeah,
I have an old spirit. Yeah.
Yeah, Mark, without mentioning names, although you've been public about your boy, he's now deceased, the former senator from Georgia. But could you speak, Mark, a little bit to the incestuous relationship between the companies and the government? I mean, you don't have to mention names, but just generally speaking, I think Rudy's spot on. No.
I like mentioning names. I have no
Okay, go
problem with
for
it. I
it. Go
mean,
go for it. I wasn't putting the screws into you. Go for it. The spicier, the better. Go for it.
once you have the FBI knock on your door and they tell you to quit tweeting about somebody, and you ask them to leave and they say no. I mean, your fear reflex goes away. So, you know, I just and then I sued them and won. Then they appealed and I won. Then I sued them for fees and won. Then they appealed my fees and I won. So, I kind of fought the law and I beat them, at least for now. But the problem now is the money is so big on the corporate side, if you will, and they hire the same lawyers, which is basically, lawyers or law firms is basically one firm, and the money and the influence is just huge. I mean, it used to be when we were younger, all of us who are speaking, a billion or two was a decent sized market cap. Now it's peanuts. I mean, small cap used to be 1 to 400 million. But if you had a hedge fund back in the day, 100 million, 200 million, you were a big hedge fund. Now
Yep.
these guys are sporting around, 100 billion, and they're operating at 10 to 15 times leverage.
Yep.
So the money now is so big, they don't want people speaking out to break the game.
Mm.
And probably, you know, something to watch is, poor Andrew left. I mean, they indicted him. He's a short guy. He did some stuff wrong, and there's some really bad emails out there. But what the current smash and grab crowd is doing is Andrew did nothing compared to those guys,
Yep.
but yet they're gonna, if his case doesn't get thrown out, he's probably going to go to prison, and he may go for quite some period of time, which
Jeez.
which would be sad. So there's this: is shorting illegal? No, it's not illegal, but they've made it so impossible. It's always been impossible, but they've made it completely impossible. No one with in their right mind would even try it
Yep.
anymore.
Yep.
Especially in this pay to play administration. And Trump's made more money personally and for his family in 6 months than him and his family has made in their entire legacy.
Hey,
And
Mark.
and the money is that big. It
Yep.
it, it really is.
Mark, can I ask you a question, personal question? I want to bring Melody in 1 second, but one question. So, in making your decision, when you said this is my last rodeo on B. Riley, I'm not going to short anymore. Was there one incident or was there one episode that caused you to think that, or you just get up and look in the mirror one day and say, "Shit, I'm not as young as I used to be. I got to stop doing this. This is not good for my mental capital." Like, what was there one defining moment, or was it just by osmosis over time? It finally dawned you, I don't want to do this anymore in
Well,
terms
I
of
knew
shooting.
I knew this Riley was going to go away. I mean, it's a $3 stock right now.
Right.
But it's three now, but at the time, I think when I said it was like 30, and they were squeezing
Sure.
people. And at $3, people would pay $3 just to watch two rats fuck. So $3 right now is essentially zero.
Right.
But I am writing a book. I'm not saying who I'm writing it with, and I reflect back over my career, the ups and downs, to end on a high note, which this Riley
Yep.
is a good thing, because I've been left for dead so many times it's not even funny. So it's the up and the down and the up and the down, and after the expose and FTX and Silvergate and
Yep.
Signature, I've had some really good ones,
You've
and
had some real home runs, my friend.
yeah.
So you go out on that. And by the way, you go out in the same tradition as my former mentor Peter Lynch. He was about to quit already, or retire in '87, early '87, because his father died of a heart attack at a young age, and he was about to quit. And then the crash came. And then he's like, he thought, I owe it to my shareholders to make it back. So That's why he didn't finally retire until I think it was 89. So same idea. He wanted to go out on a high note. So
Yeah, I mean, it's just, and it's, I'm going to be 65 in a week. And, there's been a lot of dog years. And it's just, there comes a time I don't need any more money. I've done enough. And it's just the mental wear and tear. I mean, I had pals who were in that Cantor debacle, or the plane crash in there. I've had a lot of friends die. My poor pal McConnell kills himself.
sure.
You just there comes a point where you just say, I have nothing to prove,
Yep.
and why do I really
You don't
need
have to
to?
do it anymore. Yeah,
Well,
exactly.
but so I'll take my energy, and I'm gonna get cannabis federally legal, and I own enough glass house, and I think the stock goes to 60 to 100, and I'll own the state of Utah, Montana, Idaho, and half of Wyoming when
There you go.
when this happens.
Love
So
it.
that'll be that, and everyone will say what happened to that guy, and you'll say he's in one of the states he owns.
Mark Fabulous. All right. Hey, Melody, are you there, Melody?
I'm here, George. Can you hear me?
All right. So you and Mark stole the show last week. This is
Okay.
fabulous. We got the two of you up there. So Melody, really good to see you. So I'm going to start off. I'm going to ask the same question that I was discussing a minute ago with Rudy and Mark. And let's talk about, because you mentioned this actually. Let's talk about government involvement in the housing industry, and you've been going on about FHA and all this other stuff and forbearance. What do you see happening? Because like you maybe you should retell the story about the FHA and what percentage is bad now and what the government's going to have to do and blah blah blah. And it's just more generally, how government is in cahoots with a lot of the actors in the industry you follow.
Sure. Okay, so I'll just quickly start with some background. A lot of people still think that the banks do most of the mortgage lending now. Huge shift after the GFC to the non-banks doing that, who, of course, do not have deposits. And so what happened is you really saw incredible delinquency in FHA starting to tick up around June of 2023. You saw the death cross, just so many people coming over. And so there was a ton of loss mitigation that was already out there. And just so people know, for perspective, I managed default after the crisis. So I kind of took over the default book at GMAC around
Right.
2012. Yeah,
Melody,
yeah,
let me interrupt you as
yeah,
I usually do. So just to contextualize
yeah,
that, you were at the table. You were at GMAC when
yes.
you know what hit the fan in '08, right? So you know of what you speak. And also, Melody, just to loss mitigation, that sounds so freaking polite.
Okay.
Basically, they're just adding the stuff onto the back end. Can you explain to people what that is?
Okay, so this very aggressive program, which was launched in 24 to keep everything stable through the election, is crazy. I've never seen anything like it. Very different than the GFC. And so what you could do is you could take up to 30% of the unpaid principal balance and just put it at the back of the loan to be paid when you paid off the loan or when you sold the home. And what was happening is originators got wind of this, and you can go out on FHA Neighborhood Watch and you can see actual originators showing early payment defaults of something like 50%, which this is always what you need to be looking for, early payment defaults. And so what was happening is you, on the one hand, had originators going out there coaching people that if you got an FHA loan, which is 3.5% down, you can have a credit score lower than 580. Give you a high.
Wait,
Yeah,
Melody. You know
sorry.
what I do this? We're not staging this, but wait a second, Melody. 580 credit score, 3.5% down. Are you serious?
Well, on the 580, you have to have some compensating factors, but typical 3.5% down. And then if you have a 580 and below, you can compensate with a higher down payment. So just to be clear,
But
but it's
that
insanity.
is total
Yeah.
crazy. All right, keep going. Go on. So yeah, okay.
Yeah, with a back end DTI or debt to income of 57%. When I first saw these, just quickly, George, in servicing, I fell out of my chair having lived through what I did because it wasn't private, it was government. And then we'll talk about the fact that the government never pays its claims. So it's ludicrous for someone like Chase to put in its 10Q that they're excluding the Ginnie Mae from their provision
Hey,
calculations. But
Melody, you got to be careful what you
yeah.
say. Cohodes may start going. He's calling 1-800 Stockholm to see if he can get a bar on the builders. Keep going, Melody.
anyway, what happened is not only do you have massive fraud, so the Fed came out in January of last year saying, fraud never stopped after the GFC. It just kept going. And in fact, when investors are involved, fraud in housing is about 1 in 4 loans for those investor loans. So anyway, people got wind, they understood that they could do owner occupancy fraud with these programs and say, hey, I'm living there for a year, because investors, this is really not a lot of skin in the game. And they use these, and they use them for what we call the BRRRR, the buy, rehab, refinance, repeat. And so you just have rings of this going on out there. So anyway, fast forward to June of 2024, you had a whole nother huge group come over. As of the last report that they officially published, it was something like a 12% delinquency rate for FHA. And everybody says, well, it's not that much. Actually, since the GFC, it's gone from 7% to anywhere from 13 to 14% of outstanding mortgages. And so,
So
in fact,
yeah, so
yeah,
hold
go
on,
ahead.
just to qualify, 12% of FHA, which in turn, like what'd you say, it was like 8 million at 55 million, it's like 14% or something like that of all the mortgages. I mean,
That's
this
correct.
is a huge freaking number.
Well, it's more than the subprime percentage in 2007. And I went back and looked at our book, where we were, and if anybody doesn't know, we ultimately went to bankruptcy. But it's funny, Mark should mention the GM building. I was in the GM building when we figured out we were going to get TARP, in New York, and that was a real big deal. But anyway, so this FHA program, so first of all, it's very low credit quality, very little skin in the game. And then what you could do through I think it was April of last year, Biden signed this new loss met in, and you could just keep going back over and over. So you would be delinquent for 3 months. You would go get this partial claim. They'd put it at the back of the loan. And by the way, Fannie and Freddie did something very similar to this as well, which we'll get to. And so people just kept doing this over and over and over. And so the Wall Street Journal article came out in April and said, you know what, of all of the delinquent loans in FHA last year, there were 9 foreclosures and there were 500,000 workouts. And those workouts, just so everybody understands.
Wait. Nine foreclosures and 500,000 workouts. Did I hear you correctly?
You did, and George, that was about the same number as loan origination last year as well for FHA.
Oy.
So they did not stop. They just kept going. And they kept getting in to me, this is predatory. They kept getting in as many folks as they could get in. And on the other hand, they were propping up the non-banks by giving them an incentive fee every time they do this partial claim, which is not a ton of money, but believe me, they need it, and they were pushing these things out. I saw it in my own client books. You got paid the next month. This was a machine, and so they could make anywhere from 500 to 1,000 to 1,500 a pop. So they just kept pumping these out. Once this program, so ultimately this program got shut down, or the biggest or most egregious sort of aspects of it, where you can only get one partial claim every 24 months. And also, to be eligible, you have to make 3 trial payments, which is standard for any other loss mitigation out there. And so this will go into effect at the end of September, October 1. And the other thing, George, and this is so critical for everyone to understand, I just don't think anybody realizes what's going on, is that if you have delinquent student loans, you will not be eligible for a loss mitigation workout come October 1. Right.
Is that's a big number too? No, I mean that's a huge deal.
It's a huge deal. So, you can, John Comiskey has done some of the math. The numbers are moving because the DOE is reporting one number for student loan delinquency, while the Fed is just showing a portion of it, because you've got a lot of people who are still not yet reporting to credit. You've got a lot of people on Save that are paying $0 right now. But we're talking, this will impact, so I'll just give you one number. In 2021, HUD came out and said, at least 43% of our borrowers have student loans. So then you can kind of start doing the math from there. But more importantly, are all these people that were doing repeat partial claims that will no longer be able to go back to the till. And so everybody also has to understand it takes 120 days to refer anybody to foreclosure now. And then there's all kinds of state noticing, things like that, that's going to slow it down. But by Q1 of 2026, we are going to have a serious foreclosure population. We should start to see. I was talking to John earlier today. I was looking at my books and what he's seeing, and I saw a spike in May. Our delinquencies double what they were last May. Typically, this is your seasonal time in mortgage where you're going to get caught up from that bonus payment in March and that tax refund. And so you always see delinquency improve. But notably this year, it didn't improve by much.
Uh-oh.
Yeah.
Uh-oh.
And then June is when you start to see trouble, but I'm already seeing trouble,
So,
George.
Melody, let me ask you a
Yes.
question: is the government, like this whole FHA thing and the whole deal? Are they just government just stupid, or they're kind of in on the scam? They knew exactly what they were doing.
I think so. I think there's always layers, George. And I worked for a politician that was deep in the machine. I think there's layers. I think that there are folks that understand what's happening. I mean, you don't make government lending 85% of the mortgage market without understanding some of these issues. And basically, if you just look at the charts, George, it's hilarious. They essentially just, where you saw private subprime lending last time, the government just slotted themselves right in there, almost to the same exact percentages. It's wild. And then Fannie Mae, that debt to income is now looking just like it did in 2007. And here's what everybody gets wrong about the last crisis. Yes, it started with subprime, and subprime peaked delinquency far earlier than everybody else. You had delinquency for prime peak in 2010. And everyone forgets that, I mean, because it was my job to watch the prime book. That's what I was supposed to do. We all thought it was going to be fine. And you just saw it degrade and degrade and degrade and degrade. And the property taxes and insurance, the insurance issue is huge. You're now seeing mortgages that their base payment is way lower than their taxes and insurance. So we have just, I mean, and here's, George, this is so important for everybody that thinks Fannie and Freddie credit quality is so great. Guys, those credit scores were being held up. We've seen those drops now, and this is going to be in your prime book. Additionally, they had the payment deferral, which was like the partial claim, but here's a catch, and it's a really important one. Those weren't recorded on public record. And so the payment deferral was, everybody had to come up with some way
Wait,
out.
wait, wait. The deferral, but they didn't put it on public record. How's that possible?
Yeah, so I was in the weeds back then, George, still there. And so I, got my machine ready to do the recording of these payment deferrals. And they just kind of quietly came out and said, we're not going to record them. Now, the partial claims are definitely recorded, and those look like a second lane, but the payment deferrals were never recorded, so but nobody knows about them. I've reached out asking CoreLogic, because they do the big mortgage equity withdrawal schedule that everybody looks at. You think, oh, well, Fed looks at their household debt credit survey, but they're going to Experian. And what I've since heard, because there's a whole other component of the private note space, there are just a lot of servicers that are not reporting to credit, or they're not reporting accurately to credit, that combined loan to value. And when the last report was put out, I think around 22 on these, there were over 1.8 million. And I guarantee you there's more of them. And so the idea that all Americans are sitting on all this equity, I'm sorry, is ludicrous. They've spent it already. And if they didn't spend it how I just told you, they are spending it by, they're going to these fintech companies that are giving them loans, like Notable will give you a loan to, spruce up your house before selling it. There's all these fintechs that have just popped up everywhere, and they're not professionals. They're not doing what you're supposed to do. They're not recording liens. There are some of them that are doing these that are. And so you saw that big article in Bloomberg come out last week about the home equity installment, which is basically a reverse mortgage. But these things are everywhere, and they're just proliferating, and we don't
All
know how much.
right. All
Yes.
right, Melody, time out, time out, time
Yes,
out. You're
please.
killing me.
I
No, you're
know. I'm
killing me. Okay.
sorry. I'm sorry,
No, no,
George.
no, 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 no. Hold on, hold on, hold on. Hold on, hold on, hold on. You have a fellow housing nerd in the room. I love this guy's avatar. So we're going to bring up Cyclone Drew to talk housing with you.
Sure.
Cyclone Drew, please unmute yourself, Cyclone Drew. You there?
Yes, yes, I am. Thank you,
Yeah,
George.
yeah, yeah. Good to see you. So I'm gonna let you two housing guys go at it, or peoples go at it. So Cyclone Drew, question for Melody, counterpoint. Have at it, Cyclone Drew.
It's actually not really a counterpoint. It's more to just
Oh, you're gonna pile on. Okay, I got it. Go
confirm
ahead.
melody. I
Go
actually
ahead. All right,
work.
all right. All right. So go
I
ahead. Tell us some stories. We love stories. Go
Yeah,
ahead.
no. I work in the actual field. Melody and I actually a long time ago used to be colleagues. I don't know if
Yeah.
she'll admit to that or not,
I will absolutely. Good to see you.
but everything she's saying I can verify. I've dealt with it more on a micro level, on a loan, loan by loan level. Maybe one other thing to add, and I don't know if you covered it, Melody, was the down payment assistance programs that come along with a lot of these
Right.
FHA HUD loans, where the borrowers are essentially getting free second mortgages for down payment assistance. So essentially, the borrowers are getting into these properties and these homes without essentially any money down. So the skin in the game is real light.
Absolutely. And they're ubiquitous. They're everywhere, George. In fact, we still haven't. Last time I looked, we hadn't spent half of the money that went out for this. So they all these states got funds for down payment assistance.
Wow.
Yeah.
So Melody, another point, and maybe Cycle can weigh in this as well. Melody, last week I mean, just the hits didn't stop. You kept on coming. Did
Sorry.
you say something about the applications for refi? It was like 41.8% rejection rate or something like that in one of the most recent months. I was
Yeah.
like, it's good.
That was in February. And and and
Right.
and I can just tell you, I think that was a combination because you didn't have most of the student loans reporting then. That was a combination of people went to go get a refi because they thought they were eligible, and then the appraiser came in and said, "Oh, but you haven't fixed that, you haven't fixed that, you haven't fixed that," and they got appraisals for like 30 to 40,000 less, and they weren't able to qualify. And so, I don't that to me, that refi rejection rate for February was still without all the huge credit
Ay, ay,
ratings.
ay.
Yeah.
Ay, ay, ay. Okay, so Melody, I was looking at Cyclone's description bio, and he's in Florida. So Melody, why don't you ask Cyclone some questions? He's from St. Augustine, Florida. So Melody, you got a question for Cyclone?
We just spoke recently. Let me think, Cyclone. What can I ask
All
you?
right, well, Cyclone, Melody reserves Melody. Your mic is going crazy. I don't know what's going on here. So Melody had special color, spicy color on Florida. Cyclone, to the extent that you can or are willing, can you give us a little color? What's going on in your part of the country? Because real estate's always a local market.
Yeah, it's local. I would say in the particular area of the state I'm in, housing prices are pretty stable in the St. Augustine area, specific to where I'm at. We just had a recent sale just on my same block where it went for full asking price, and it was a lot more lofty than I thought. Now, other areas of the state, especially coastal areas in South Florida, Central Florida, in the Panhandle region, those are taking hits, especially your condo projects, just because of all the new condo requirements after the one down in South Florida fell a couple years ago. It brought on a lot of new permitting and construction updates that are driving HOAs, quite through the roof. And I'm sure Melody can confirm that. But there's just anecdotally, I actually have someone who works for me who lives in Pittsburgh and has a, condo in Naples, and he's closer to retirement. He goes back and forth. The condo fees down in the Naples area got so bad he was forced to sell just because it was getting out of control. So that's just an anecdotal piece of evidence of what I'm seeing for the state.
And isn't if Melody, you were speaking to maybe Cyclone can verify. Inventory's piling up right now, isn't it, Melody?
It absolutely.
In Florida?
Well, in Florida, so just to be clear, this is the end of their season, but it is so far up. I mean, it is. It's been piling up for the last 2 years. So we're ending the season at really the highest in the last 2 years, and in most markets across Florida, higher than prior to COVID. But in other parts
Right.
of the country, Their season is a little bit different than those snowbird states, and we're starting to see that the Northeast is really joining the party, and the Midwest is slow. The West has been on fire since June. I mean, they've really been leading sales, and most of that, George, has been what I call motivated selling, and that's where you've got sales up but prices down. And I think we're gonna, we had year over year, month over month, negative prices on LA this month, and that is just going to continue. The distress I saw out there when I was out there was just so massive.
Yeah, so Melody, maybe you and Cyclone could. So Melody, you were making the point about how last week you thought L.A. like the rebuild's not going to happen. You were citing the precedent of Fort Myers, and I don't know, Melody, you want to rehash that or Cyclone, you want to talk about Fort Myers and everything after Milton came through, whatever the storm was. I lose track of it. But Melody, in your opinion, like you think the whole L.A. thing is like just not it's not going to happen, and maybe you could recount for people what happened or didn't happen in Fort Myers.
Yeah, so I don't. If it's going to happen, it's going to be some time. And similarly, in Fort Myers after Ian, you had a lot of investors kind of descend on the area and just buy everything they could, all of the property. Fast forward, a year later, insurance increases just went through the roof, or you couldn't even get insured, or you can use the state back plan, which it has abysmal payout rates, and all you can see is for sale signs in Fort Myers. So I honestly think that, at first everybody got real excited, but you can see that now in the sales numbers. That's all backing off because similarly in California, you've had a lot of insurers leave the state, and for the fire plan, again, the payout's not great. And guess what happens? The way that works is that any of those losses go to any of the insurers that are in the state as well as the homeowners. So you are just seeing astronomical increases, and it's just not worth it. And rich people stay rich by not spending stupid money. And so everybody,
Yeah.
yeah. Anyway, so Drew, I don't know if you wanted to add something.
Yeah, Drew, especially on the insurance angle in Florida, like with the state
Yeah,
insurance
it's
fund, and
we've
go
seen a
ahead.
pretty steep increase over the last couple of years. I will say this, just on a personal note, this year's leveled off a little from where it had gone, but I would say from 20 to now, it's been easily a 40% rise. And my home's it's not all that old. And I'm not next to the coast. I'm in a little more inland. So, I can't speak for everybody, but I know there's, anecdotally with friends and family that live in the state, very big jumps over the last couple of years. But I do believe with some of that stabilizing as values or home prices have kind of stagnated. The cost to rebuild has stagnated, and that's been a big part of it.
Oy, oy, oy. All right, let's bring some other folks in here. I see DCP. You had your hand up. We're going to DCP, and then we're going to do Aaron. DCP, please unmute yourself if you're there. There you go.
Nice to meet you, George. Yep.
Thanks.
Billy,
What's up?
thanks for being my advocate. Rudy, big shout out for what you do. Melody, what you're talking about is literally what I saw when I was tranching securities for GE subprimes group in '07 in like August when the buyback started kicking in and everybody was leaning on the AAA rating of GE's book. That's pretty scary, actually. For those that don't know me, I started trading in like the '80s, early '80s. Dropped out of college to go down to the Merc, traded T-bills, traded Eurodollars, filled orders for Plaza, Solomon Brothers, and then went local and just traded my own book since 1991, 1990. I'm looking for a catalyst, right? And you can see it. Is it PE? Is it real estate? Is it commercial real estate? Is it private residential? Um, but I literally remember sitting across the floor, across the river from the Merc, having breakfast with one of my buddies and the largest broker in the back month Eurodollars. And we went to high school together, but he literally looked at me and he said, dude, the S&P is a giant fucking Ponzi. They'll displace the worst and bring in the new ones.
Yeah, DCP, let me interrupt. Just time on this. When was this conversation taking place, DCP?
Oh,
This
that
is
was 1989.
so he's telling me it was a Ponzi back then. Okay, all right, keep going. Go ahead.
Oh, yeah,
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 go
yeah.
ahead. Go ahead. Go ahead.
And he's right. I mean, he's totally, he's retired in Key West right now. And he's totally right. He retired at 45. He's got 50 million bucks. He doesn't give a fuck. And I fought it. I fought the whole thing all the way through. Like I was the Rudy guy. I was like, this is bullshit. This is bullshit. This is bullshit. This shouldn't go up. But the reality is, it's just a giant game. And then it corrects itself at some point in time and then lets everybody reload. And I kind of feel like we're there again, but I don't know when that's going to trigger. And that's obviously the hard part, right? In trading is trying to get the timing right. But it literally feels like we're gonna ride this, we're gonna surf this fucking tax bill, this big, beautiful, stupid fucking bill, and we're gonna surf this thing up until we get to the top of the wave, and then we've got to figure out what's gonna trigger it. I've been thinking it's the bonds that are gonna trigger it with higher yield, but I'm long Z5, Z6 SOFR spreads because I think we're gonna get another cut that's not priced into the market now. And so it's so hard to trade this market on a contrarian bearish basis. You know, the only market you can short is bills and bonds, right? I mean, that's the only one that's easy and accessible and you don't need to borrow against. So that's the market to like speculate in right now. But it's on the floor in 1998, 1999. Every fucking trader worth their salt knew that it was a Ponzi in the NASDAQ. And I'm buddies with Pax, who was the largest trader in that market at that time. We've been friends since the 80s. And he's like, dude, you just got to buy it until you can't. And so we're at that same similar junction point, right? We've got 5, 6 different levels of things that could go wrong. And we've got so many people so connected to a president that wants to make himself a legacy and is cashing out. And it's such a challenging trade to figure out what's going to go first. Who's the first one that's going to step into the empty elevator shaft? And we're just going to go down. But until then, you got to stay levered up. And it's
Yeah. By the way, is DCP? Is that I'm teasing at DCP? Bad joke attempt. Are you Chuck Prince, former CEO of Citi, in another life?
I am
Keep
not.
dancing by the door. I know. I'm
I am
teasing
not.
you.
I am
I
not.
know, but you sound like you may be a relative of his. I'm teasing you, my friend.
No, no, no. DCP was my badge on the floor,
No, I understand.
and
I don't take it literally.
that's
I'm
my
just.
initials.
I just think no. I sorry. I think you and Chuck Prince might be relatives. Like keep dancing until the music stops. Stay by the door. So no, I'm with you. So DCB, that's great. Just stay right there. I want to bring some others in here as well.
Sounds great.
All right. So we're gonna go to Aaron, and then we're gonna go to Keith. Aaron, please unmute yourself.
Hey guys, I actually work for a mortgage servicing company right now, and I can 100% say what Melody is stating is correct. Um, there's a few other things too that at least I didn't hear her say. Starting in October, it sounds like, and I haven't read through all the guidelines yet, but it also sounds like if you've done a partial claim or modification or anything like that in the last 2 years, that you won't be able to do another one until the 2-year mark is up. So that'll push a lot of these people that are doing them once a year, twice a year, they won't be able to do them anymore. Also, with FHA, there's an unlimited number of bailouts. I call them bailouts right now. So keep doing your partial claim, use up that 30%, then you just do a modification. Just tell your mortgage servicer you lost your job, whatever, you can afford your house again. You could do another modification. You literally just keep it rolling and rolling. And we legitimately cannot say yes. The other thing is too, is that we used to ask for a packet with like pay stubs and everything else to actually show that, these people can afford the house and afford the payment, and, they lost their job and they're back to work or whatever the hiccup was that they can pay it again. Well, we just take their word for it, and all they have to do is state that they can afford the house again, and we're not allowed to ask for documents.
Wait. Why is that? It's
Oh,
just like with everything else, there's no integrity anymore in anything. Like what's with that?
it was too
COVID.
hard for him, George. It was too hard.
So
COVID. All the COVID
Yeah.
rules. COVID basically said, hey, if they say they can afford it, you have to take their word
Yep.
for it.
That's right.
what?
But
Yes.
they send them in the mail, George. That you don't even have to call. They send them in the mail to you now. We used to have to underwrite them completely. They
Yeah.
actually you don't have to call, you don't have to ask. They send it in the mail.
Hey, Melody, this is a bad joke. I always have to clarify because people don't know what I'm serious when I'm saying. Melody, it's like you guys like should all get a room together or something. I'm sorry, I didn't mean that. Get a dining room together and drink. Melody, DCP. I'm afraid, Aaron. I'm afraid Rusty's going to come up, and I mean, like you're all singing from the same prayer book, no, Melody?
Yeah. So that's what's happening. So yeah, and people, and so few understand what's actually going on because it's all complicated and weird, and like you said, loss mitigation. What does that even mean?
It sounds so wonderful. Loss mitigation. Okay, it's like instead of saying leverage buyout, to say private equity. Excuse me. No, loss mitigation. It sounds good, doesn't it? Loss mitigation.
Yep.
I mean, Jesus.
Here's
Yeah.
another
All
thing
right.
too that I didn't hear anybody talk about is there were programs called the HAF programs, HAF. Some states still
Yes,
have money. Some
they
states
do.
are done with the money. It depends on the state you live in, but and depending upon the state is how much money each state was allowed to make up their own rules to an extent. So some states were giving out like 25 grand. Some states were 65 grand. And in most cases it was free money and you don't ever have to pay it back. But there are some states where it becomes a grant after 7 or 10 years and you don't have to pay it back as long as you don't sell the house. You can still refinance, do whatever else, they'll subordinate, but you can't actually change the deed, transfer the deed to anybody else, and then it becomes a grant. But yeah, all this free money plus all these people
All
doing these
right.
bailouts, and it's still going on. And then there's mediation accounts that I deal with too. With the mediation ones, I'll give you an example. I have one in Connecticut. This woman hasn't paid in, I think, a little over 5 years, zero payments. We've
5 years.
5 years.
5 years.
We've been in
Okay.
I
mediation
can beat
for
that.
since the last bailout. We've been in mediation for I think 14 months now. Met multiple times with the mediator. We have to pay an attorney every time we talk to this person. Every time we have a mediation, quite a few $100s to pay the attorney that we're required to per the state of Connecticut for this one. We have multiple states we do this, and we are basically stuck. And the mediator will not let us out of this one. This woman has no interest in getting a job. She says she cannot work. She is not physically able to anymore because of COVID. She said she was impacted by. And then the last time the mediator was going to let us go out of mediation, but then the woman said that she was going to check herself into a mental health situation. And so the mediator said, well, let's just give it another 2 months and we'll check back in 2 months. And so they wouldn't let us out. And they're supposed to let us out of mediation and actually foreclose. We cannot foreclose while we're in mediation. We are stayed just like a bankruptcy. So we can't foreclose and do things on these people anymore
Ay,
for a
ay,
while.
ay.
Stuck.
Aaron, stay there. Don't move. Um, don't move. I want all you housing geeks to stay there. I want to go to Rusty and then Julie and then TX. Rusty, my friend, floor is yours.
Oh, So I dealt with during
Sorry, I
COVID.
forgot about Keith. It's gonna be Rusty and then Keith. I forgot about Keith. Rusty, go ahead.
So I dealt in COVID with trying to figure out what to do with Sagent and the fact that they had Florida Community Bank and Synovus dealt with about 100 billion. I'm sorry, 100 million. It was a $3 billion portfolio of arms out of Florida that were way past due because Sagent was not servicing them correctly. And you're right, everyone's saying the exact same thing. The thing is there was a lot of protection. It initially got extended 3 months, meaning you couldn't go and file anything to the credit rating agencies, and then it got extended another 3 months. And then lo and behold, you have mortgages that are theoretically past due 365 days plus, yet they're not past due. They had never collected. Um, the the owner was just living there, fine, getting nothing doxed on their credit report. It was interesting, and they're right. COVID changed all that. It was an amazing thing, and you're dealing with 5 1 arms and 10 1 arms, 15, and that was interesting, and still is prevalent.
Really?
And doing short sales, and yes, loss mitigation is just some bogus term for exactly what it sounds like.
And we haven't even started talking about the buy downs, George, which will start resetting in earnest in July of this year.
Melly, I have a friend who wants to know about the buy downs. Please talk dirty to me. Talk buy downs, man. Melly.
Well, so the buy downs, we heard a lot in the media about the builders doing this. This is where they basically buy your interest rate down for you, and then if it's like a 3-2-1, it's going to reset in 3 years to the full interest rate, and they just pay this for you. But they weren't the only ones. If you guys remember hearing, anytime Rocket or United Wholesale comes out and says, "Oh, we'll give you a lower rate," that's because one of the GSEs is behind there funding it. And so Fannie and Freddie did these as well. And I just got my big tower in the mail, George. I'm about to download all this MBS data because through initial calculations, it looks like on the Fannie Freddie side that in some form or another, interest rates were about 25% of loans had some sort of compensation on the interest rate. And so more to come on that, but we will start to see those 3-2-1s
Hey.
reset this year. And it wasn't just the builders, it was everybody. And so this is,
Oh my
yeah,
God.
we've been originating at lower interest rates. So,
Hey.
yeah.
All right. Hang there, Nasa. You gotta wait because I got a big line here. So we got Keith, and then we got Julie, and then we got TX. Keith, the floor is yours.
Thank you. First of all, thank you, Melody, and all those MSR people. Those are incredible stories. This sounds like The Big Short all over again. It sounds nuts. Um, we own some of this Rhythm, which is a large mortgage service.
Know them well. Know them well.
Yeah. And do you think, just out of curiosity, do you think that all of these no doc loans, which you just talked about, is this spelling bad news for people like Rhythm, or is Rhythm just going to benefit because they're going to clip fees
No,
the whole?
they've been benefiting, Keith. That's coming. That'll be over in
Yeah.
October. And so they really they were able to kind of, with rates going up, they were able to kind of write that servicing asset up at the end of last year. They had to write it down just a little bit when rates went down this quarter, but they have just been barely holding on. A lot. I think this Cooper deal is about the fact that it's about their debt maturity schedule, and they lost a facility last year, and so these non-banks are in for a world of hurt because these claims never get paid timely. It's like an insurance company. You file a claim, they deny it the first time. You have to give a whole bunch of paperwork, which we're really bad at in mortgage. And oftentimes when I managed a claims department, we always had to self-curtail because there's just so many things that they will hold against you that are not in your control. And so there is no 100% payout. And as these claims get delayed and paid out, the non-banks are going to run into huge liquidity issues. And on the other side of it, they're not going to have the incentive fees anymore papering over those losses.
Wow. All right. Well, thank you for that. My question was really for Marc Cohodes, and I was just curious.
Yeah. Hold on, Keith. Mark is not. He's not on the stage anymore.
Oh,
So
so
yeah, I'm sorry. He's not here anymore.
got it. Okay. Well, I appreciate it. Yeah, I was curious about the whole marijuana legalization aspect.
Yeah.
Yeah.
Keith.
Anyway.
Keith, table that. If you want to DM me, I can I can help you with that because Mark was at my conference last week. But
Terrific.
let's just stay in the housing rhythm if
I'll
you don't mind.
I'll 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 move off. But Rudy, thank
Okay,
you for what you're doing, man. It's awesome. You're doing this.
appreciate it. Appreciate it. Thanks for your support. Just send me a DM. All right, Keith.
Will
All
do.
right, so let's keep this moving. I want to go to who am I missing here? It was in order. Hold on. Gnostic, even though you have most favored nation status, you got to go to the back of the line. I'm sorry. We have Julie.
Texas,
We have Julie.
Julie and Texas Kitty.
Yeah, Julie and Texas Kitty. Julie, Texas Kitty. Go ahead, Julie.
Yes, sir.
Welcome.
Welcome. Okay, great. I just wanted to point out something to DCP. He was talking about the market being a Ponzi. I'm sure that you guys are aware that in 2003, the CBOE changed the trading model used for options to a variance trading model. Were you aware of that? They changed from Black-Scholes at the money strikes to a variance trading model. You can see their calculations and their, discussion of it on the CBOE website, their FAQ. I recommend that you look at it. When you look at the distribution, probability distribution for the higher time frames, your quarterly options, your monthly, your weekly, your daily, the market falls within the first standard deviation, which is the dealer's delta neutral, right? Where they sell their premium for the cheap risk from the mean to the 3 on both sides is 68%, 34% each side.
Julie, with respect, I'm really interested in what you're saying. There's one thing about spaces that was kind of hard. We kind of talked past each other. We had a really good thread going on about housing, and I'd like to keep it on that. So I'm happy to discuss that with you further. And I'd love to have you come into space and we can make you the speaker even. But like right here, right now, we have so many people on housing. If you don't mind, with respect, I really want to stay on housing. So if there's something you want to say on housing, that'd be great.
Before you cut me off, let me just
Julie,
finish.
Julie, with respect, I'm not cutting you off. If you talk to me like that, I will cut you off. I guess she dropped down. Dilly, that was not me. She dropped down by herself. Dilly, you there?
Yes, I'm there.
Well, I don't know what that was about, but that was
I'm
like,
not sure either. Let's move on to Texas Kitty and then Gnostic.
yeah, Texas Kitty, floor is yours.
Hey, George.
Hello.
Long time no talk.
Yeah, you don't write, you don't call. What's going on?
Bonjour.
What's going
No,
on, man?
no, of
Kitty.
course, I actually sent you some,
All right.
some tweets and some pictures. Okay, I'm gonna, oh,
TX,
yeah.
chill out. I've been super busy. What's going on, man? Speak.
Well, I was about 10 days in Italy, more specifically in Sardinia. So if you want to talk
Oh
about
man,
this,
I'm jealous. But hold on, I don't. Stay on stage. I want to talk about Sardinia. We're not going to finish the space without talking about Sardinia. But right here, right now, I want to stay on this housing thread. So,
but housing in Sardinia is pretty darn cheap, I can tell you that.
I know. But TX, let me ask you from so serious. Let's say serious on this for 1 second. All right.
Okay, okay.
From the mortgage-backed security standpoint, because you're a fixed income nerd. From mortgage-backed security standpoint or anything,
Were you
do
asking
you,
me something?
do you have some perspective of
On the real estate, I mean, Melody is the expert. I listen to her. She talks quite a bit with Adam Taggart on
Yep.
Thoughtful Money. Between her and the other guy that has the website, Nick something. I mean, they have bucket loads of information. The only thing I can tell is that yes, when I look at the supply in Dallas,
Yes.
it is certainly going up. There are many more dots on the map, whether it's Zillow or Redfin. The prices, though, they do not seem, at least on paper, to go down, but there is definitely more supply. Where that stuff transacts, I cannot tell you. I don't know.
But you can confirm that the inventory is going up, yes?
Oh, yeah, there are many more dots on the map. Yeah.
Yeah, okay, that's helpful. TX, please stay there because I need to hear about Sardinia. So don't leave. But I want to work everyone around the room. Let's go around the horn quickly. Gnostic, my friend, floor is
No
yours.
worries.
What's up? Yeah, stay there, TX. Gnostic, what's up? Gnostic, please unmute
Hey there.
yourself. Hey, what's
Hey
up?
there.
What's
Oh,
up?
my ears perked up when I heard marijuana. Love to have that discussion. But housing, one of the things that hasn't been mentioned yet is that the sellers that turn around and sell that have equity, or the builders that have equity, back in 2008, 2007, 2008, did kickbacks, 50,000 to 100,000 to the buyers, which gave them sufficient down payment to increase their down payment to the lower rate so they could get off the loans that were being talked about earlier. I live in Vancouver. Right now, we've got builder kickbacks of $200,000 to $300,000 per unit.
What? Wait a minute.
Yes,
Wait. Stop. Even Melody perked up. 200,000 to 300,000 on how much of a total value?
total value 1.5 to 3 million.
Wow. Okay, so that's a huge number. I keep going, Gnostic. Go for it.
So what's happening is the builder, because prices are falling quite dramatically, particularly within the condominium environment, where the overbuild is so high, and so that they built for Airbnb. So little tiny places, major turnover, same as Toronto, major turnover, all the rest of the place. All of a sudden, in the middle of the massive construction, they banned Airbnb. All of a sudden, these places are going bankrupt left, right, and center. And so that's putting inventory on the market for the completed ones. The uncompleted ones are basically falling in their skeletons in the sky, so to speak. The ones that are being put up now that I'm looking at, one of the tallest in my neighborhood, 33 floors, just completed over a subway stop, so it's selling fine. But what's happening for the builders is, because they're getting challenged on the price on the buyer side, they're basically, and I say this anecdotally because it's what I've heard, I haven't experienced it myself, but some ethnicities within the seller buyer market are basically offering the seller or the realtor a enhanced commission, and the enhanced commission plus some off the price is going to the buyer in order to meet their down payment requirements, so that the price doesn't get altered and the price doesn't fall and knock down all the rest of them.
So hey, Gnostic, hold on a second. Hey, Melody, can you hear me, Melody? Shh.
I can,
Don't.
yeah.
Yeah, don't tell Gnostic this, but I think he meant Chinese. I think that's what he meant.
No, I
No.
didn't.
Okay.
No,
No.
there's another significant ethnic group in
Indian.
Vancouver. You
Indian?
got it. Yes.
Huh.
Yep. Yeah.
Okay.
This is
Punjabi,
why
to be
you keep me
specific,
around, George.
Punjabi.
I'm
Yes,
smart.
Yeah.
Julie, I got it.
Okay.
Melody,
Yeah.
Us white people are
Melody. I
just the
think you
stupid
need to
people.
have a Canada road trip, and Gnostic can take you around.
Yeah. Yeah. And Gnostic, that's happening here too. I mean,
Yeah,
in the US. Yeah. So,
I figured it was, but
yeah.
nobody had mentioned it.
Yeah.
I have direct experience with it here, so I figured I'd bring it up. And ironically enough, everybody here is basically white, and the white people are the guys getting stuck with a big stick, which is really quite funny. I helped somebody negotiate one with a ethnic real estate person, and I'm looking at him, and he's looking at me back, going, "Why are you looking at me like that?" I said, "Just consider me an East Indian, and let's try this all over again." And the guy looked at me and went, "What? Let me count. Let me bring in my friend here." So I brought in a friend of mine who proceeded to curse in Punjabi, and then the Indian looked at me and goes, "Okay, we do it this way. You shut up." Bang, 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 bang. $250,000 kickback.
Wow. That's
Melody,
crazy.
you hearing this, Melody?
I am. I mean, like on our side, it's more like 60,000, but that is absolutely insane. I mean, the Canadian housing market is just, it's
Oh,
insane.
it's nuts.
It's nuts.
It's absolutely
Yeah.
nuts. Yes.
Yeah. So they're, I mean, this,
So
yeah. It will be
proportionally,
synchronized.
you're looking at 3 to 10%.
Jesus. All right. Gnostic, stay there. Let's keep moving. I want to bring in, and anyone's allowed to speak again, but let's just get everyone here first. So we got Personal CFO Partners. Welcome, my friend. What's up? Please unmute yourself, Personal.
Yeah, hi George. Big fan. Welcome back on the saddle, Melody. Love your work. So here's my question. I was at Bear, my career, mortgage-backed security, structured finance, and I was at ground zero when the whole thing went down. We had the Fair Housing Act in 1996, all the way up. It took us another bunch of years to finally get to 2008 to kind of the whole thing to break. The $64,000 question, Melody. Do you seek any catalyst coming down the road or any time frames when the shite really starts hitting the fan? And I know that's an unfair question,
Sure.
but at some point things have got to break. And do we have any idea what time frame might be?
Yeah, so I'm wondering if you know Tom Morano. You probably do.
I traded with Tom.
Yeah.
Tom's a great guy personally, so I know
Yeah,
him very
you know
well
Tommy
back
well.
in the day.
Yeah, I worked very closely.
I knew all the players
Yeah,
there.
yeah, yeah. Yeah, so I think I can give like what the dominoes are. I actually think that I feel a credit crisis coming, but I think it might start in either auto or commercial. But basically what I think is going to happen is you're going to see another big cohort come over in this delinquency in June. They're going to get that last partial claim that they can before October. And then stuff is really going to start to hit the fan from there. But I think honestly, it's awareness, and what I can tell you is that you are seeing the narrative change. Like Redfin coming out today saying, "You guys, you sellers, you better think about lowering that price," and just showing the differential between the buyers and sellers in the market, which I'm not even sure how they put that together. So what you're seeing from the industry is a complete narrative change, and I think what happened with that is that my mortgage clients started to become aware as well. And so I honestly think the trigger is awareness. But as you know, what took awareness last time, that was a downgrade. And we were in front of it because we had a purchase price adjustment we had to do for the Cerberus transaction. But I think something like that is going to bring awareness. And I have a friend, Locks at Unicus Research, and she's been tracking kind of these credit outlooks, and we're seeing more and more downgrades than we are positive upgrades. And so I think the downgrades of longer bank portfolios was a shot across the bow. And I think we might see one of these big players, perhaps in auto, get a downgrade, and I think from there it just all sort of spirals out of control. But by Q1 of 2026, we're going to have material foreclosures unless they intervene. I hope that helps. I know it's not clear.
No. Hey, you listen. One thing I've learned over the years, you never know what the catalyst is until it's happened.
Exactly.
The wood's on the fire. The tinder's there. Somebody's poured the gas. You don't know who's going to drop the match.
Exactly.
Yeah, personally, I couldn't agree with you more. It's the same thing for the stock market. It's like, you get, I mean, there's so many swans all over the place, white swans, gray swans, black swans. It's like you can't predict this stuff. It'll probably be something that none of us are even talking about. I couldn't agree with you more. I want to keep this moving, please. Let's go now to, I'm going to let Rusty with a quick follow-up, and then Mark Newman. Rusty, you got a follow-up?
Yeah, I was gonna say everyone keep an eye on the SNCs. I put it in the purple pill. The problem is unlike before where we had CRE, going down. Well, there was recovery there. So even if there was a loss or a default, there was recovery. With the increase, if you look, there's a lot of C&I loans that are the biggest issue in the leverage lending space and the ones in the criticized and classified asset range, specifically the ones in special mention and substandard. The issue with that is the fact that these have literally zero collateral. So the recovery is going to be nothing as compared to a CRE loan, which will have something to liquidate upon. So that is eye-opening to me, to see that 20% of the book there, if you look at it, and the leverage space was in the C&I category. That's where regulators are focusing, as opposed to prior periods. So check that out. It's that if you're talking about credit, and then private credit itself is an issue because of the oversight.
Wow. All right, let's keep. Thank you for that, Rusty. Please stay there. Let's keep it moving. We got Mark Newman, who I haven't heard from. Hey, Marky, how you doing?
Hey, how's it going?
Great.
I'm sorry. I might, my battery's dying and I'm having charging issues, so this could be a quick one. But everyone's so a couple things. Number one, the next war never looks like the last war, right? And so in '00 we had the bubble in tech, and then in '07 we had the financial crisis. We already did the sort of housing crisis one, right? 1.0. So I don't really know what the driver is, and I heard Melody earlier talking about Fannie Mae, Freddie Mae. I don't really know where it comes from. And someone asked what was the catalyst coming. I just would caution, and George, I think the previous speaker, the one before, said, you never know when until it's here. My instinct says that it's not just going to be housing alone, right? We already did the housing thing. And to that effect, isn't like guys like BlackRock waiting to buy all this stuff anyway? That's
No,
just one thing I kind of throw out there.
they're selling.
I don't know that answer.
They're
I just sort
selling.
of,
Yeah.
that's the flippant nature of my approach to some of these things. But I would just say, where does that catalyst come from? And, is it like, I mean, and I know, George, you want to stick to housing, like, is it a dollar crisis? I don't know that either, because when we talk about the big currencies of the big countries, Japan's had an issue forever and their currency is still around. So, like, I don't know where the catalyst comes from. I would just say my instinct is housing and the repricing that you talked about coming next month or whatever. That could be part, but I think it's too simple to say, oh, we're going to have another housing crisis. That's just my 2 cents.
Yeah.
All right.
George, you want me to answer a little bit of
Yeah,
that?
Melody.
Okay.
I'd
Yeah,
love to hear
Melody, go
something,
for it.
Mel.
Yeah. So I would say, yeah, I think that this is an everything bubble, and there's so much that's going to go, and there won't be the ability. We've already had GFC style intervention in the housing market, and so whatever they try to come up with this time is not going to work. Similar to how they tried to do a refi boom in 2010 last time. And the other thing on the institutionals, they are net sellers right now, largely, and they can't afford these properties because of the property tax and insurance. So they're slashing and burning. Would they potentially come back in at the government's behest later down the road after the correction? Yes, but they're already selling, especially in markets like
Yeah.
San Antonio and Atlanta.
Yeah, Melody.
That's amazing insight. Thank
Yeah,
you, Melody.
Melody, could you just amplify that a little bit? Because you and I talked about this last week when you were at the conference. We talked about how Airbnb and the financial buyers went from juicing the market because they were buying, and that's really now become hidden inventory because they're financially motivated to sell. Could you just amplify that a little bit, Melody? Riff on that.
Yeah, yeah, and I just want to remind everyone that like there's this huge private note space where a lot of these Airbnb players play, and they trade houses like cards, and it's not even recorded on public record, or if it is, no one's really seeing it. And so what most folks don't think about the housing market, they think about primary ownership, but that is not what the housing market is really about since honestly the late 80s. It's about investment. It's about buying homes, renting them out. And then short-term rental came on the stage and people went bananas. There's over 1.6 million of these in the country. You go to somewhere like San Diego and you look at the coastline, it's 12,500 of these things. And in Austin, 15,000. You won't know that if you search Airbnb because they're only going to show you 1,000 results. And so people are unaware just how much speculation occurred in this market around short-term rental. And these guys were told to buy 10, not one. They went to the banks, this little program called AirDNA said, you're going to get $600 a night, 55% of the year. And so they walked into this non-bank lender. And when I say bank, that's what I mean, mortgage bank,
Oh,
non-bank lender, and said, hey, and then they turned around and said, why don't you buy 10? You don't need to buy one. And so now these private loans are only 3% of the market, but these guys went, when they couldn't get a loan in any of the banks, they created this entire space, this private notes space, very similar to the 80s with seller financing and things like that. So I think that we're missing about 25% of the picture of the mortgage market right now because of some of these shenanigans and tricks. So.
Oh, I think it's higher than that, Melody. Sorry.
25%.
Oh, okay. Yeah.
Yeah, and I think she's low on the number.
That's a wow moment. Wow.
That's a wow.
Melody, can you just repeat that? Melody, can you just repeat that again? 25. You think we're missing 25% of the mortgage market? Is that what you're saying, Melody?
Yeah, of the transaction and mortgage outstanding. There are so many private notes out there. I went to a conference in Nashville in June, my second year there, and found out the technology provider that they use told me there's over 1 million loans on their platform, many of which are not reporting to credit. And so there's a whole market out there that none of us know anything about, and it's not tracked anywhere.
God almighty. All right. Rusty with a follow-up, and then Aaron. Rusty.
Yeah, the biggest thing about that and what she's saying is when the FFIC and they come in and they're taking a look at the call report, this is who everyone is beholden to in a bank. They're looking that you classify a mortgage a specific way. When you classify it as a 1 to 4 family, well, it's okay. It's fine. It's outside of the realm. But what they'll do is they'll float it between a multifamily, which makes it appear as though it's a commercial real estate property and back and forth, right? And a PMP 1 to 4, all it is basically like a rental loan. And so that was what was occurring to get around this glut. COVID did a number. What happened is these servicers were told, don't collect. And they didn't know what to do, so they just stopped. And the problem is these things never got refied. They never extended the maturity date out, which is a refi. So what I did back then, I basically packaged the things up, sold them as a group at a discount, got a big fee. Someone else dealt with it, but yeah, it's a glut of stuff like that that's happening,
Oh,
especially in the condo space.
Russ, you can't make this stuff up. My mind is being blown by all you guys. All right, we're going to go to Aaron, and then I don't know who's after. Oh, and then Gnostic. Aaron, you got to follow up?
Yep, I got you. I do have to get going in a few minutes. That's why I was just going to kind of say goodbye, but also to kind of sort of not necessarily answer, but give you guys some idea. Everybody's like, oh, what's the catalyst going to be? I agree. There's bubbles in everything, but real estate wise, whether it's the catalyst or not, I would say in October, that's when a lot of these guidelines are going to change and go back to reality, as I'd like to say it, where people have to hopefully start showing pay stubs and bank statements. They can't keep bailing themselves out again and again and again. Um, Student loans are having to start being repaid. All these things are starting to change. Give it a few months after that, 3, 6 months, whatever, you're going to start seeing an ungodly number of foreclosures. But you got to remember what state you're in too, because some states take 6 months to foreclose, some take 3, some take a year or more. So keep that in mind too, in terms of what you're going to be seeing as things flow through and where they're going to happen in the country. Everybody thinks that the Northeast and Connecticut and other places, oh yeah, there's no foreclosures. Well, yeah, because you have that woman, like I told you about, who didn't pay her mortgage for 5 years,
Oh,
and she's gotten bailout after bailout after bailout after free money, and she should have lost her house a long time ago. But you know what? The mediation, all this other stuff that the certain states do prolongs all this, but there's not going to be any more bailouts, so a lot of it is going to start to come to a head. I'd say 6 to 12 months afterwards, depending upon your state, after October.
Aaron, I want to thank you enormously, and please come back. You've been really, really helpful. This has been great, and I look forward to speaking with you again. So, it's really been great. Thank you, Aaron. Thank you very much.
Yeah, thank you,
Um,
Dave. Bye.
okay, all right. So I think Gnostic had a follow up. I can't remember where we were. Gnostic, did you have a follow up?
Yep, I was going to do a follow up on it, but one of the things that people don't realize is the size of that market, and the off bank private lending is huge. And people are going into it constantly, and there's all sorts of tricks. Aaron just described a few of them that people do in order to get their purchase through. And that's just a really, that's one of the first things that the mortgage brokers are suggesting to people when they sit down and do it. Make it commercial. Buy enough. In Canada, you buy 5, you're commercial. Now you're 6, 7, and 8 are all, they max out at 5 on a personal basis. So you go up, you just go commercial and register yourself as a commercial. But tied on top of that, I think we covered what's going to be one of the main catalysts earlier on in yesterday's presentation, I think, or the day before that. When interest rates go up, that's going to be the killer. Because when interest rates go up, that's going to grind everybody down for many years as they buy or sell. It takes interest rates go up, nobody's going to sell, inventories go down relatively. Any new property now gets challenged on price. You're going to get a distortion in the market, a K value for the whole real estate market, where anybody selling is ground to death. Anybody that still has it won't sell. Rental availabilities will go through the roof. It'll be a hell of a lot cheaper to rent than it will be to buy, and then rents will start going up as well. So people are going to get squeezed on both sides as soon as interest rates go up. And if the bond failures continue, I'm watching the 30 and the 10 just to sit down and say, and the 2 for that matter, just to say, when's this going to happen? And a couple of bad failures, I think we've got a bad problem, and the Fed's going to have to step in order to stabilize it. But that's only a short-term fix.
Right.
So long-term, we've got the thing is, everybody's looking for the black swan event. I would suggest we have several black swan events that are lining up to come through, which will really just trounce on people so hard that they won't know what hit them.
Oh, Gnostic. Hey, all right, let's keep going here. By the way, Melly, I'm going to throw this question to you since you know about things Florida. Someone put a question in here. It says from Stock Gravity. I'm not sure how many sources still show year-on-year price increases for South Florida. Nothing is selling fast here, and everyone is cutting prices. Are the news sources behind? I'm seeing a weaker market than I'm reading about. What's with that, Melody? Are they faking the numbers? There's a time lag. What's going on with that, Melody?
I think it's a combination of all those things. I think that it just takes so long for us to get these results. We should have May results soon, but most of Florida was year over year and month over month negative, except for Tampa was kind of an outlier. And so we'll see. And by the way, prices aren't coming down because nothing's selling. I mean, that's part of
Yep.
the problem. That's why we saw prices up last year, is because the median was pushed up because you saw no transactions at the lower end. But yes, it's delayed. Again, by the time we get June results, probably in the middle of July, I think we're going to see a much different picture. And we were hearing about all these cancellations, which that takes 30 to 60 days to cycle through. And so, yes, it's just on a delay, but you can see it all over Florida, Texas, and California.
Wow. Wow. Hey, all right. Before we go back to Sardinian real estate, which we're not going to end the call without hearing about it from TX. Does anyone else want to add anything on this housing thing? Because I mean, Dilly, I'm sorry, it's an hour and 40 minutes. This has been a brilliant space, though. So, I'm
Hey,
just gonna
can I
let it
just,
rip. What?
Mel, would you shoot me a DM? I've got some info about Florida.
All right, you got
Uh,
that, Melody.
I'll-
Shoot
Yes,
Rusty in the end. Okay.
I sure will.
yeah.
Okay,
All right.
thank you.
So TX, tell us about Sardinia, and we're all jealous, and the prices are really cheap. So we know the wine's great, the people are nice. I think you said it was boring, but how was your time in Sardinia, TX?
No, I had a wonderful time. I stayed at my brother's because he has a place there that he bought about a year ago. Now, first thing I wanted to say before I forget, I listened to the to GCP, who spoke earlier on, and we have quite a few things in common because he's a 100% Bond guy, like I've been, and we've been exchanging tweets about music as well. So we got to
I
talk about
love
the bull
him.
market at some point.
I'm actually making George bring him on the show soon. So
Yeah, no, and he has obviously good musical taste. As far as Sardinia goes, so I don't. The people are very nice. The cost of living is pretty low, if not very low, because even though it's an island, unlike Corsica, for instance, which is just 25 miles north of it and part of France, Sardinia produces everything. They produce veggies, they raise cattle, they have wineries, and what else? What am I missing? They produce all the food that you need essentially. So they are pretty much self-sufficient, and it's actually the second largest export region in Italy, to give you a sense. So you can go to pretty nice restaurants, have a couple of appetizers, maybe share a main meal or a large pizza because they are humongous, and a bottle of wine, and it's gonna set you back $45. And they do not accept tips. So even if you want to tip them, it's not good manners to don't tip them. So that's for the cost of living. As far as housing goes, the problem I face, as far as I'm concerned, is that quite a lot of the houses there originally, and even for the new builds, are, so to speak, vacation houses where people from Italy or wherever in Europe, they have a place and they go there a few weeks for the summer and they rent it out when they can. But those places are tiny, at least very much so by American standards. They're like 700 square feet tops, which is fine for a couple of weeks. And you can find plenty of those places for like 300, 350K, and you're going to be 200 yards from the beach, and some of them you're even going to have a sea view. So and I mean, even though it's not big, the same kind of place anywhere in the States, in Miami or wherever, will set you back easily $1 million. And the same place, for that matter, in Corsica will set you back twice as much for reasons that I cannot explain, because Corsicans are rude people, and I hate French people anyway. As far and so I went there because I wanted to buy something, because I'm setting a place in Paris, in the outskirts of Paris, and I definitely want to buy something there. Because not only do I think it's good value, it's also because, well, there are tax advantages and all sorts of things. The problem is that if you're looking for a house, like a real house, talking 1,300 square feet and above, there are not that many. They are mostly occupied by the locals that live there and stay there, and you're gonna have to shell out a bit more. You're talking 600-ish. You're still gonna have fantastic views. I mean, the same house would cost $2 million over here, easy. But my budget was like, I'm trying to find like a 80, 90 square meter, which is like 1,100 square feet, and I was looking for something around 400K. And essentially, that's very difficult to find, except my brother's place, which he wants to sell, and that I may buy. But the thing in Sardinia, like in most islands, is that during wintertime, it's dead. Many of the businesses just shut down. So you gotta be prepared for that, or be willing to accept the fact that in some places, there's not gonna be much at all going on, and quite a few restaurants and basic grocery stores are just gonna be shut down. So that's the thing that scares me a little, and which made me look in areas that were closer to Olbia, which is the airport in the north, where there would be more activity, because my brother is more like 50 miles out of the airport, and it's all very nice in the summer. The beaches are just absolutely outstanding. You would not believe it. You can check on the net, and it's not made up by Adobe makeups. The water is crystal clear. You have 5 different shades of blue, of green.
Oh man.
It's
Oh man. Oh man.
and for the people that like windsurf, wing foil, or kite surfing, it's the mecca. There is wind every day. Every day there is wind
Wow.
along
All
a beach
right,
that stretches.
TX, you're killing us. Any last words you want to say? Because you're killing us.
No, the only thing I want to say is that there are advantages, and Meloni has taken some measures to attract people, Americans, not only Americans
Yeah.
but Americans as well, where you can you get a deal for first of all, there is a bilateral tax treaty. So if you have a pension or social security being paid out to you in the US, but you decide to live in Sardinia or Italy for that matter, wherever in Italy, you will not be taxed in Italy, because there is a bilateral tax treaty. So that's a big thing. There is no double taxation.
So TX, you're going short Miami and long Sardinia. That's the trade, right?
Well, right now I'm going short France, long
All right,
Sardinia.
we got it. You're market neutral. We got it. We got it. We got it. All right, listen, TX.
No, but it's a
No,
great
we
place.
got it. We got it. And we'll do a whole space in Sardinia sometime. But I think we got the picture. All right, Dilly, I'm turning it over to you.
How do I follow that up, George?
We gotta have a space in Sardinia. We'll get some from Corsica and some from Italy. We'll do a whole space sometime there.
No, hold on a second, because I forgot one thing. I spent one day in Rome on my way back.
Yeah.
The cost of 1 square meter on a real estate basis in the nice areas of Rome.
Yeah.
So one square meter is about 100 square feet.
Yeah.
It's like 5,000 euros. 5,000 euros for a square meter. In Paris, it's twice as much. That's equivalent to 500. I don't know how much. That would be essentially a 1,000 square foot apartment would set you back 500 grand.
Wow.
in Rome, in central Rome, right next to the Colosseum.
Wow. Wow.